Imagine an invisible shockwave violently rippling across a vast, dense cityscape, shattering the glass of towering corporate skyscrapers. On September 5, 2016, that shockwave hit India. A single company announced a welcome offer to the entire country, free unlimited voice calls and completely free 4G data. This chart tracks the market value of India's incumbent telecom operators. $2 billion in competitor valuation vanished in a single day. The pressure was so intense that within months, 5 competing networks were driven into non-existence, their market shares fading out entirely. The disruptor was Reliance Jio. To pull off a stunt giving away the internet for free, they had quietly spent over $20 billion across 6 years building a nationwide network, all before earning a single rupee of commercial revenue. Reliance dominates the modern Indian economy by weaponizing patient capital. They possess a systemic ability to absorb years of deliberate losses, providing the financial runway to outlast and bleed out every competitor in the room. The origin of this massive war chest starts in the mid-20th century in Aden, Yemen, where a young Dhirubhai Ambani worked as a petrol pump clerk. Dhirubhai realized early on that building massive industrial plants under India's strict government regulations required capital that wasn't controlled by traditional institutional banks. In 1977, he bypassed the banking establishment. He launched a public stock offering that courted ordinary middle-class citizens directly, single-handedly creating India's retail equity cult and securing an independent supply of growth capital. This new retail money funded a central strategy: backward vertical integration. This diagram shows the logic in action. Reliance stopped buying raw materials on the open market and instead bought the factories that made them. They moved backwards from textiles to synthetic fibers to the petrochemicals that make the fibers, and finally to the oil itself. Owning the entire physical chain structurally lowered Reliance's unit costs below what any competitor could survive, locking in a permanent market advantage. In 2002, Dhirubhai died without leaving a will, throwing India's most powerful corporate dynasty into absolute chaos. A bitter 2005 settlement eventually fractured the company, dividing the empire's vast assets equally between his 2 sons, Mukesh and Anil. Anil Ambani relied heavily on debt to fund his half of the empire. By 2020, his telecommunications and financial services businesses had collapsed into insolvency, and he reported a net worth of 0. Mukesh Ambani took a different path, retaining the core cash-generating oil and petrochemical assets to patiently fund a new era of massive infrastructure expansion. The brothers' split serves as a natural experiment. It shows that possessing immense capital is useless without the strategic discipline to execute long-term bets. By 2010, Mukesh Ambani was armed with immense oil profits and a plan to re-enter the telecommunications space. He used a strategic acquisition to quietly hoard broadband spectrum, kicking off a secret 6-year, $20 billion build-out of the Jio network. This flywheel explains the strategy. First, use radically cheap data to force hundreds of millions of new users online. Reliance then monetized that base by layering an ecosystem of retail and media apps on top, capturing profit at every step of the digital journey. Mukesh simply took his father's 20th century physical integration playbook and applied it to the 21st century digital internet. By 2026, Reliance has shifted its core weight. Consumer-facing digital and retail businesses now generate over 55% of the conglomerate's total earnings. Global tech giants validated this shift during the pandemic, injecting roughly $25 billion into Reliance and cementing its status as a world-class digital platform. Enduring dominance goes to the player with a structural funding advantage and the sheer stomach to sustain years of upfront losses. The single greatest risk to the empire's future remains a repeat of the catastrophic family succession crisis of 2002. To avoid this, Mukesh Ambani has publicly and gradually transferred operational control of Jio, retail, and new energy directly to his 3 children. This new generation is now tasked with conquering capital-intensive frontiers like AI infrastructure and massive solar and battery gigafactories. The Ambani empire sustains its colossal size by continually wagering its wealth on the next generation's most expensive, patient bets.